Good afternoon, ladies and gentlemen. Welcome to the Intelligent Ultrasound Group PLC interim results investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions at any time and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, all questions will be reviewed, with responses published on the Investor Meet Company platform where it is appropriate to do so. Before we begin, I would like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I'd now like to hand you over to CEO Stuart Gall. Good afternoon, sir.
Thank you very much. Welcome to our interim results. So I've just got a few slides at the beginning which really just explain the company for those people that don't know the company. We are very much an ultrasound company. Our vision is to make clinical diagnostic ultrasound easier to learn and simpler to use. Now, why do we think that's a large future market? Well, for a long time, doctors have been trying to look inside the body to see images that can help clinicians decide and diagnose. And initially that was through X-ray, then you had MRI, CT, but ultrasound is the cheapest, safest and fastest medical diagnostic tool available today, and it's applicable in many specialities. And the biggest issue with ultrasound is that unlike X-ray and CT, ultrasound is a dynamic real-time modality. Okay, the skills of the operator are paramount, but acquiring these skills is a key obstacle to faster adoption of ultrasound. It's a difficult skill to do. You know, you're moving a probe, micro movements, they change the view. It's very much something that you're trying to look at a 3D object, but you're seeing it in 2D in grayscale. So our vision is to try and make this easier and simpler to learn. And the way we like to sometimes explain what we're trying to do and how we're trying to increase the technology value of what we do is if you think about driving a car and how that's very operator dependent and how computers and AI are trying to actually make that easier and simpler to use, is that you can use driving simulators to learn how to drive a car. Then when you get in the car, you've got various aids like navigation and lane change warning devices to help you drive while you're actually driving. And actually now we're moving towards self-driving cars where they're fully automated and do all the driving for you. And we're trying to do the same thing in ultrasound. So we're taking that operator dependency, teaching a doctor how to scan through high fidelity simulation, following them into the clinic, giving them real-time AI clinical support, and then ultimately moving into automated diagnostic and again, using AI software to potentially in the future enable scanning to be done at home. Now, we're very much aimed at the first two areas of those, the simulation of the classroom. And for the first time, I think we're really properly seeing for both parts of this classroom to clinic vision, how we're starting to see both sides starting to generate value. And so from a classroom simulation side, really good growth of sales of our core business, but now actually seeing the fruits of those first sales coming through on the clinical AI software side. So from a half year perspective, we've had very strong revenue growth, 62% up, best year ever, just under £6 million worth of sales, and well on target to hit our 10 million analyst target that Senkos have in the marketplace. Now, our revenue comes in two streams. The first being simulation, classroom, second being AI clinic and AI software. So the first of those, simulation revenue summary, how is that growth? Where has it come from? So simulation revenue up over 50% in the period. Direct sales, we sell to the market in two ways. We sell with our own salespeople in the UK and the US. We operate out of an office in Alpharetta, Atlanta, which covers the whole of North America. And then we have an office in the UK. And then we have a number of resellers around the world that sell our products outside of the UK into Europe and into Far East, Gulf States, Australia, etc. So from a UK perspective, absolutely fantastic trading period, over 160% up. Really, really excellent performance from the team. £4 million of sales compared to 1.5 last year. We reckon about 1.4 of these were judged to be exceptional orders from an NHS training initiative in the first quarter. But really all our sales are one-offs. We just wanted to highlight that a number of these had come through from a particular health education initiative, and that if you look at next year, you probably won't see such a similar cluster. However, fantastic start to the year for the UK. North America, slightly slower start. Sales slightly down. Mainly, we just saw a little tightening of the marketplace. We do expect that to recover though in H2. So, and we're seeing that starting to come through since we moved into H2. The one negative in the sales were the reseller sales to the rest of the world. They were mainly impacted by the shutdown of the Chinese market. Broadly, that was due to COVID. The closing down of regional travel, the complete closing down of regions, massively affected the ability of our reseller to sell a device that requires you to go and demonstrate a product face to face. So we saw a decline in sales in China. And to a small extent, we've seen a decline in sales, obviously, in Russia. We don't sell to our Russian reseller because of the Ukraine war. And obviously, that's about £200,000-300,000 worth of business. So both of those combined saw our rest of the world sales down in the first half of this year. But we are seeing a recovery second half in terms of we expect sales to beat, obviously, H1 in H2. So we're well on target for the simulation revenue to hit its 9.4 million target for the year. So why do we think this is all very positive on a go-forward basis when we're looking into 2023 is that we have a broad range of simulators now in the marketplace. If you'd seen one of our presentations 4 years ago, we only had two products. We had Scan Trainer for obstetrics and gynecology, and we had HeartWorks for echo. We now have both those products supplemented by a POCUS product called BodyWorks, of which we've now sold over 200 systems into the marketplace. And there's a major upgrade of that product coming in H2 this year. And then our newest product in the range, BabyWorks. This is a simulator that's aimed at the neonate and pediatric simulator marketplace. That launched at the beginning of the year. It's doing all that pre-selling and raising awareness. That really means that this is a strong product range for 2023, where we'll be looking to grow our sales over 2022. We also are a reseller in the UK and the US for a bronchoscopy device. So we've got a comprehensive range of simulators now, and that's why we have confidence in our simulator range going forward, being able to meet expectations of growth as we move from 2022 into 2023. So the second revenue stream is our clinical AI revenue area. So this is the area that sort of most people have got very excited about over the last couple of years. It's a new area. There's a lot of investment going into this area across the world. I would say that almost every single manufacturer would expect to have AI as a part of their medical imaging platform over the next 5 to 10 years. So we very much want to be at the forefront of that. We believe we are. We're starting to see the first growth in sales from our new products in the marketplace that have recently launched. So those products are, we have 3 now. So I think this is the key thing. Our clinical AI product range is no longer just a jam tomorrow. We hope to bring things to the marketplace that are going to have future sales. We now have products in the marketplace. So we have 3 products, as I've said. The first product is Nav Assist, all about automated image analysis for protocol-based scanning. Now, we have an exclusive deal with GE Healthcare. They are one of the world's biggest manufacturers of ultrasound devices, the biggest ultrasound player in the obstetrics and gynecology space. And our software is integrated into their Volison range of ultrasound machines. We launched on the Swift over a year ago. That's at the sort of medium low end of the marketplace. The big step for us now is our product going onto the Expert. The Volison Expert, codenamed 22, was launched in July, and this is one of the big sellers in this space. So having our software on there as an option is really, we believe, the trigger to us generating significant royalty revenues going forward from our partnership with GE. So we're very excited about where this is going. We look forward to that rollout of the machines continuing, and this, we hope, is the first of, in effect, many products in this range in our partnership with GE. And certainly we see it as a sort of pillar of driver of sales going into 2023 and onwards. So that's the GE product, Nav Assist. It's known as Sonolist on the GE machines. And certainly if you go onto the GE website, you'll be able to see how their launch has gone. And we'll be keeping you updated on how these sales go in H2, and then most significantly in 2023. So from A second pillar perspective in terms of AI, we have our own product in the marketplace called ScanNav Anatomy. This is a peripheral nerve block product. What that means is basically this is all about local anesthesia being used so that you can basically, if you have an operation on your arm or your foot, etc., you can do a local block with anesthetic so that you can have an operation without having to have a general anesthetic. Now, why is that of benefit? Well, it's cheaper for the hospital because it's you stay awake during the operation, you don't go under, so it's safer and it saves money and time for the hospital in terms of the operation. So there's a big push to doing more peripheral nerve blocks around the world. And we launched a product that basically can plug into an ultrasound machine, gives you a second screen, and our AI software is able to recognize the image that it can see on the ultrasound and overlay it with a color that reflects the anatomy that you're looking at. So, for instance, it shows yellow for nerves, red for the artery, green for muscle, and that's highlighting it live in real time to the anaesthetist as they're doing the injection. Now, this was felt when we did our studies in the UK that one of the because this is aimed at the competent but not confident scanner, that this sort of device would help basically be a significant aid to the anaesthetist. So we've launched that product in the UK. It is CE approved and now on sale, and we are making sales, but we're expecting to get FDA clearance in H2 this year. So that will be a significant step forward because then we'll be able to sell this product in America. We're already geared up to sell it. Our first salesperson is employed and trained to do that. And we see this as being an important pillar of our revenue going forward, not only for H2, but in 2023, generating revenues for the company. And the third product in the clinical AI range is Needle Trainer. This is very much linked to ScanNav Peripheral Nerve Block. It's a teaching tool. It uses both advanced simulation and AI to basically teach you how to do ultrasound guided injections. So you, on a live volunteer with a real ultrasound image, our system can overlay the needle as it's injected into any part of the body, very much helping a trainee understand what's happening on the screen and how they can identify the very difficult to see needle as it goes in towards the target area. So this product is sold in conjunction with ScanNav Peripheral Nerve Block. So you actually get the perfect example of our classroom to clinic approach. We have a simulator that sells into the classroom and then the clinical AI that goes into the clinic, and that is sold as a package to customers all around the world. That will be available in America, we believe, over the next couple of months, and very much again makes the third pillar of our 2023 sales. So we're, as you can see, excited about what these three products can bring to the marketplace and drive sales from an AI clinical image analysis perspective going forward. So if we look at what have we done compared to what we said we'd do at the beginning of the year, we are absolutely on track to achieve everything we said. So we had three sort of broad categories. If you look at the sort of group targets, we're on target to hit both our upgraded revenue target of 10 million sales, our EBITDA loss target, and our minimum cash at the end of the year. From a simulation perspective, we are on target from hitting the simulation revenue, but also launching the three upgrades to our products, three products in the marketplace. Bodywork's launching H2. We've got a new endometriosis module for Scan Trainer, which will launch in H2, and also a new BabyWorks cardiology module launching in H2. All these are important for continuing the growth in sales over 23 and then 24. And then finally, from a clinical perspective, again, on target to hit the 600,000 of sales. We're hoping to beat that. But then we've got the very important developments. Clearly, FDA clearance is a major step for the business. We're hoping to announce that over the coming months. We've got a new 2.0 version with a femoral block added for the PMB product. That will be CE approved over the coming months. The Needle Trainer with a handheld ultrasound device launching in H2. We've completed Nav Assist being on Voluson Expert, and we're doing considerable work on ScanNav Detect, which is our diagnostic AI work. So that is very much in the proof of concept stage. There's a lot of work been going on the speccing of the product, but also signing the agreements that we need to access all the data. So from a achievement of targets, we, I think, have couldn't be in a better position from where we are now. So the final thing to talk about before handing over to Helen will talk about the finances. We made some board changes this year. So Professor Amzo and David Baines retired at the AGM, and we were pleased to announce this week that Dr. Christian Gutman joined as an NED on the 15th of August. He is a recognized leader in shaping the global agenda on AI from a regulation, standard, guideline perspective. He's got outstanding AI research, development, and commercialization experience. He's built over 100 novel AI systems products. He's a founder of the Nordic AI Institute. He advises government ministers and think tanks. We think it's a real coup to have him on our board. And this is the third new NED that we've had over the last 12 months, and really does cement the change in the business to being able to have experience in OEM manufacturers. So Michelle joined from Philips. She headed up their ultrasound division. Adding Christian Gutman completes that change in having really experienced NEDs in the new sector of the marketplace that we moved into. So I'll just hand over to Helen, who'll talk you through the financials.
Thank you, Stuart. Good afternoon, everybody. So this first slide just shows our very encouraging financial set of results for the first half of 2022 compared to the first half of 2021. So our revenue, 5.9 million, up 62% from 3.6 in the first half of 2021. That's resulted in an improvement in our operating loss. That's improved by 42% compared to the first half of 2021, which was 2.3 million loss. We continued our R&D investment across both parts of our clinical and simulation product portfolios, spending 1.7 million in the first half. And we ended the period with cash of 3.5 million, so a reduction of 1.5 from the start of the year. So just going into a bit more detail on the income statement. So the revenue of 5.9, that split 5.6 from our simulation product portfolio, 0.3 from our clinical AI. So encouraging growth as our clinical AI traction starts to take place, and 56% growth across our simulation product portfolio compared to 2021. Our gross profit therefore increased 66%, an improvement of 1.5 million in the period, of 3.8 million, as well as a slight improvement in our gross margin due to a higher proportion of our direct sales through the UK. Our SG&A spend was 4 million in the period, an increase of £500,000 on last year. Majority of that is down to the increase in sales and distribution related costs. So with higher revenue, we incur higher commissions and shipping costs. We've also invested some additional resource in our sales teams in the US and in the UK. We've got 2 now in the US, one dedicated to selling the clinical AI products and one in the UK also focused on those products. As well as on top of those costs, annual pay review of about 4% average, as well as increases in marketing with exhibitions and conferences back now post-COVID. We also expensed 1.1 million through the income statement, so a slight decrease because we're now able to capitalise more. So overall, our R&D spend was 1.7. The extra 600,000 we've capitalised within intangible assets on the balance sheet. So operating loss at the end of the period is 1.35, so a 900,000 improvement on this time last year. And adding back our R&D tax credit of 300,000, our loss after tax was 1 million compared to 2 this time last year. So encouraging growth, and really good progress towards reaching that profitability inflection point. So from a balance sheet and cash flow point of view, our cash at the end of the period was 3.5 million. So that reduction of 1.6 made up of the 700,000 cash used in our operating activities. So improvement of 1.5 million compared to last year. And then on top of that, then what we've capitalised in terms of R&D spend, what we've capitalised into property, plant and equipment, and our lease payments. So that made up the 1.6 million cash burn in the period. From a net asset point of view, clearly the decrease is largely down to the reduction in the cash in the period, as well as kind of movements in our working capital. And then the next slide really just illustrate really the cash movement at the start of the year. principally being from our operating activities and investing activities. And then the improvement from where we were this time last year, where we spent 2.2 million kind of operating cash flows. As a result of our excellent trading performance, we've managed to reduce that to only 0.7 million. So I'll hand back to Stuart to make some closing comments.
Thank you, Helen. Okay, so I think, this has been a really good trading period. We're on target for our upgraded 10 million sales target. I think the most important thing is, though, that we've got 3 AI-related products launched and in the marketplace, and that one of those is now on the Voluton Expert. So the second GE ultrasound machine to include our software as an option add-on. I think that really is the sort of significant milestone that people wanted to see. We weren't just on the smaller machine, we're now on the bigger volume machine. And we look forward to keeping a close eye on what that does for our sales over the next 6 to 18 months. Now, I think the interesting thing for us is clearly we have to balance our cash. We've got things to invest in, and we're trying to anticipate how this AI and simulation growth curve is going to go. The harder one to anticipate is the AI side. If you look at the upside of that, can be very, very strong potential, and it's trying to manage how quickly does that expand and how quickly will that impact us and reduce that cash burn. I think when you look at the space we're in, there's a tremendous amount of activity at the moment. There's a lot of investment going on in companies. Certainly if you're in California, Singapore or Israel, there are some serious amounts of money being invested into this ultrasound image analysis space. There's also a number of acquisitions going on in the space where you've got the big manufacturers have been acquiring companies like Meadow AI. You've got new startups being invested in. So there's a lot of activity. This is considered to be, I think, a very interesting and a future space of growth. And we think that we have absolutely got it right with our classroom to clinic approach to this. I think that we've sort of, for me, we seem to be, we are not quite being noticed at the moment for what we've achieved. We're one of the leaders in this space, and this is seen as a space of, this is where most of the companies are all putting their effort into, where you can get AI image analysis in real time. And we are one of the leaders in this space. We've signed an excellent deal with GE. We've got 2 and 3 new products in the marketplace, potential for a 4th one coming. So we remain very excited that we are in the right place at the right time, and are a bit of a hidden gem at the moment. So that concludes our presentation, and I'll move over to the questions.
Stuart, Helen, that's great, and thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the team takes a few moments to review those questions that were submitted already, I would like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. Stuart, Helen, as you can see, we have received a number of questions throughout today's presentation. So thank you to all of those on the call for taking the time to submit their questions. If I could please just hand back to you to run through that Q&A tab, and where appropriate to do so, if you could please just read out the questions and give your response, and then I'll pick up from you at the end. Thank you.
Okay, thank you. Okay, so the first question is from Matthew. When do you think ScanNav will be available in the US, and how big is the addressable market in the US? So there's 2 things. So obviously, ScanNav is the name we use the generic name we use for all our AI products. We have Nav Assist, which is obviously sold under the GE name of Sonolist. So Sonolist incorporates our software. So that is currently available in the US. So I think it's not addressing that. I believe this is talking about ScanNav Anatomy, which is the PMB product. So that is dependent on FDA approval, or FDA clearance, or I should say. So we are expecting that in the second half of this year. So we're very confident that we're going to be selling that product in 2023. It all depends how quickly FDA can turn around the last elements of that clearance. So we're currently committed to saying H2. We obviously hope it will be earlier in H2 rather than later. But the main thing is to say, when do we think we'll be starting to make proper sales of that? Well, that would be in 2023. It always takes time to grow things and build things up. I think the important thing in medical sales is you need to have key opinion leaders that support you. You need to have the papers out there that justify how you're changing the pathway or changing the analysis or saving money for a hospital. Those are all basically starting to come through in the UK. And we've just had a article published in one of the medical journals today, writing about ScanNav P&B in the UK. And I think we'll obviously be then looking to do the same thing in America as soon as we have clearance. So from an addressable market perspective, well, this is a product that can sell into every single US hospital. So we see that, any hospital that is doing any form of local anesthesia injections for operations could be a beneficiary of our product. There are thousands of our anesthesia ultrasound machines sold in the US every year for exactly this. And we would look to be selling into that retrofit market. So, the retrofit market's normally a pool of about 5 to 7 years of machines that have been sold, and we would look to be trying to sell in and access that market. So we think it's got a large addressable market, and that's why we've specifically recruited a salesperson in the US to start that process. So I hope that answers that question. So on to the second question, again from Matthew. Can you expand on your partnership with GE Healthcare, and are there any other such partnerships in the pipeline? So the partnership with GE Healthcare is exclusive in the area of women's health. They have the exclusive rights to our AI software. Obviously, as the largest obs and gynae ultrasound player in the marketplace, we think that's a really good tie-up. We have an excellent relationship with them. That is all about basically us providing our AI software into their women's healthcare marketplace, wherever that's possible to put it in. So when we develop products, either on our own or with them, it's about then us working with them to try and take those products to marketplace. Our first product is the 20-week product, but clearly we would look to try and bring out other products across the whole gambit of women's healthcare. So I'm not sure what else I can say about that, but just to say that it's going very well. And as a partner, they have been excellent. We share a lot of information together. We work very well together, and we're enjoying that partnership. Mark has said, how are sales progressing in China? And on a separate note, can you expand on your sales function? Is this managed internally or outsourced? So obviously sales have traditionally been good in China, but have fallen off in the COVID years. So sales are probably 20% what they've been over the last 3 to 4 years. We have one partner that we work with in China exclusively. They are called Master Meditech. They have offices all over China, sell our products, our range of products. And we manage that by we have a UK based reseller manager who coordinates all our resellers around the world. So we've got about somewhere between 26 and 28 resellers who sell into about 42 countries around the world. Clearly some of those are small and only sell a couple of machines. But other ones are clearly large. So some, the French, German, China, Australia, Scandinavian markets are quite considerable for us. Question from Jonathan. GE's FDA approval document referenced Sonalist Live, which is not available on the Swift. Are you able to comment on the capability of this particular product? Unfortunately, I'm not. I'm afraid I'm under a non-disclosure agreement to talk about GE products that aren't in the public domain yet. Obviously the name is, but it doesn't describe exactly what it does. So I'm afraid I can't give you any information about that, but I will give you information as soon as I'm allowed to, and as soon as anything about that product does move into the public domain, then I'm allowed to talk about it. With CE mark approval and FDA approval anticipated in H2, what do the prospects look like for an OEM agreement with ScanNav P&B? So, I think that they will increase. So I think we've been waiting to have FDA approval before we go and properly approach all the OEMs about this product. Having proven that we can get a de novo FDA application through as soon as we get the clearance, I think that will be obviously a key step. It's a key indicator that basically this is a product that's going to have approval on their machine, and I think the chances increase with that. I can't really say any more than that. Obviously, having a working product that does anesthesia highlighting, peripheral nerve block highlighting, we believe is an attractive piece of software to embed in the ultrasound machine. So our product's very much aimed at the retrofit market, but if we can sign a deal with the manufacturers, that means we can target the new market, and that clearly is something we would like to do over the course of the coming months. Jonathan again, is there any initial feedback from GE on Sonalist following their recent Expert 22 launch? So it's very early days. We are in the first few weeks. I would say that the feedback is good. It's been very positive. I can't give you any sales feedback. The sort of anecdotal feedback is that doctors like the software. They like what it does. They like the potential of what it does. And I think that's very much in terms of it's very much a support tool. It augments the sonographer's skills. It gives them that safety net. It helps not only in training them and making sure they're learning, it also helps when you're scanning in real time under pressure, because it's giving you that feedback that you've met the protocol. So one of the reasons that we developed what we call ScanNav and GE called Sonalist is that we wanted to give a tool that not only supported a sonographer to help them potentially scan faster or potentially scan better, but we wanted to give a tool that actually reduced the stress of scanning. And that's why we felt a device that tells you if you've met a protocol, feeds that back to live, it means it's a stress reduction tool. And I think that's a big thing at the moment in radiology, in scanning in general, is the burnout rates within institutions. And so any device that can help that, we think has got real commercial appeal to the hospital. Now, clearly that's going to be tested with this launch and as the product gets taken up, but we think there's a lot of potential with this product. I believe GE think the same thing. David DB, GE is restructuring its health business. Is this causing any delays or obstacles to progress? Not that we've seen. No, they've been great to work with. We haven't noticed any differences. There's all the meetings are all occurring on schedule. I think it's only a good thing from GE's perspective. It gives them a certain autonomy and freedom. They're clearly out there doing things in the marketplace. They invested $50 million into an Israeli startup called Pulse & More. They've acquired BK Medical. They're very active. They want to stay number one in this space. And so I think it's only positive what they've done. Jonathan, Sonalist offers potentially significant efficiency benefits in terms of time required for a scan, consistency and quality. Will GE be conducting studies to support marketing of these features? And I'd say yes. I mean, again, I can't talk for them, but every product that sells in the medical space, the key is all the data that supports it. So all the medical studies that have to be done are a key part of the marketing support that goes behind all these launches. Obviously, sometimes that can only be done properly once the product's been cleared and launched. And that's absolutely what would normally happen. And certainly what GE do, are at the forefront of doing all this, is making sure that there's all the evidence there to support that sale and the reason for a hospital to buy their product. We do the same thing. We're trying to do the same thing on the PMB device. We try and do the same thing on Needle Trainer. It's all about giving evidence. And as much as you can do about that, helps you with the selling perspective. It in effect is the shortcut to selling. So you want to combine that with key first users. You want your case studies. You want your key opinion leaders pushing product. But also clearly you need the papers to back it up, that give you that peer review data that supports why you're investing not just your money, but your time in purchasing a product. So all that is happening, and it's why we sort of feel confident that will start to benefit. Nothing instantly happens, but we will see that coming through and see that growth. And that's why we remain excited about the future.
Stuart, Helen, that's great. And thank you very much indeed for taking the time to address all of those questions that came in from investors this afternoon. And of course, if there are any further questions that are submitted today, we'll make these available to you immediately after the presentation has ended for you to review. And ladies and gentlemen, we'll publish all those responses where it's appropriate to do so on the Investor Meet Company platform. Stuart, perhaps before redirecting those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that'd be great.
Okay, yeah, of course. Well, I think I would just reiterate, it's been a great first half of the year. We absolutely think we're in the right place at the right time. An AI software provider that's built on its foundations of its simulation business to provide this classroom to clinic vision. And we're really looking forward to the next 12 to 18 months.
That's great. Stuart, Helen, thank you once again for taking the time to update investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Intelligent Ultrasound Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.